So again, for people who have not been to Start Pride, this is really just a fireside chat, right? So it is really about just two people talking about, asking questions about what he's done in the past, et cetera, et cetera. So feel free to hold questions till the end, which is around 8 o'clock-ish. And then we'll open for Q&A for Spencer to ask questions. So feel free to answer. And again, like I said, feel free to get up, get some drinks, food, whatever you want. You're not going to bother us. And sit back and enjoy yourself. So what we do is, I always send out questions, say, hey, this is going to be here. Who has some questions? So some of these questions come from interesting people. Some of them come from interesting people. And some of them come from my brain at some level, whatever that falls. So let's just start off. I want to just get, just to learn a little bit about it. I mean, obviously we can read about you online and, you went to Harvard, et cetera, all the fun things. But tell us, like you started at basically investment firms, TPC, TPG, and Goldman Sachs. What was the decision around that? Like, why that?
Well, I went to Harvard undergrad, and there's sort of this conveyor belt from Ivy League schools to Wall Street. It's sort of like this immutable kind of magnetic energy that it's pretty hard to resist, especially when you see all the other sheep kind of going, in front of you. And that siren song, is fairly irresistible at that age. So I'd worked a couple summers on Wall Street, and I liked it sort of enough, and I didn't really know what else to do. This was 1997 that I graduated from college, and what was interesting is that really the only people in 1997 from my class at Harvard that moved out west and worked in technology were the people who couldn't get jobs on Wall Street or consulting firms. And I mean, they were the sort of dregs of our class, and they ended up at Yahoo and eBay and Excite and Lycos, and ended up having really fascinating, amazing careers, but really only by accident because McKinsey and Goldman Sachs wouldn't talk to them at the time. So I went to Wall Street just sort of like everybody else, and I hated it. I guess is the short version. It's a little more complex than that, I guess. I liked certain aspects of it. I liked certain things about Wall Street. I liked the fast pace. I liked the intellect of the people there. A great thing about just a high caliber firm in finance is they get sort of they attract really amazing people from all around the world. And so that's good. And I also like getting a lot of responsibility at an early age. That was also great. But the mercenary culture of Wall Street is really uninspiring, and the type of work that you do is really pretty boring. Sorry if there are any investment bankers in the room. I apologize.
There's anything wrong with that.
But anyway, it wasn't for me, I guess, to make a long story short. I'm happy if you want to beat up more on Wall Street, although you've already self-selected, for a life of higher purpose by being here. So I probably don't need to beat this dead horse. Yeah. And the lawyers in the room, at least you're here trying to support entrepreneurialism, so I applaud that. You're fighting the good fight within the confines of your own profession. So that's good. So anyway, that's how I ended up moving out to San Francisco and entering technology.
What was the few years you were in that? What did you learn and bring that forward? What was like, hey, the good thing I got out of this was X and Y.
Well, you learn financial sophistication pretty quickly. I learned how to read financial statements, how capital markets work, how capital gets allocated, why. You also learn how to get to the heart of a business pretty quickly. Because what I was doing specifically is I was in the mergers and acquisitions group, and so we would get an assignment from some giant industrial company with a problem, like we want to sell this division, or we think we want to sell this division, or we think we want to buy this other company, and help us think through if that's a good idea, and if so, how should we do it, and if we decide to do it, help us execute on that transaction. And so you learn, and at a very early age, how to how to dissect a business, which is undoubtedly helpful. And now that I run a public company and we've done 10 acquisitions, a lot of what I learned back then was helpful. So it wasn't all bad.
Yeah, exactly.
You also learn, sorry, one other thing, you learn work ethic for sure. They work their butts off. I mean, that's the great thing about consulting, investment banking, or law is you work incredibly hard, and that's good. At that stage in your career, you'd want to work that hard because you want to be a sponge and learn as much as you can, and a lot of that comes from hard work.
And it's not like you're going to sit on your hiney forever, right? So you pick more of an entrepreneurial path, obviously. What put you in that path? I mean, was it just because you just hated being an investment banker? Did you really have a desire to be an entrepreneur?
So what happened was I left Goldman Sachs in New York, and I moved to San Francisco. I got recruited to go to a firm called Texas Pacific Group, or TPG Capital, which is a very, very large buyout firm. They do late stage buyouts, companies like Ducati Motorcycles and Petco and J. Crew, lots of companies that you would have heard of. They buy and sell. TPG got their start with the airline industry. So in the early 90s, they bought Continental Airlines out of bankruptcy and turned Continental around. Then they bought America West Airlines out of bankruptcy and really turned America West around. And by the time I got there in the late 90s, they had actually sold a lot of their Continental stake to Northwest Airlines. And so by 1999, when I was there, they actually controlled three domestic airlines. And they owned Ryanair, which is the largest carrier in Europe, sort of the Southwest Airlines of Europe. And so what was happening in the late 90s was these private equity firms were trying to figure out how to play the internet. They saw venture capital as an asset class really earning all the headlines, but also attracting all the limited partner capital into venture capital, because that's where all the market value was being created, was in venture capital, more so than private equity. And so private equity firms were looking at their portfolios to see how to leverage their existing portfolio companies onto the internet. And that was the time that I got there. And so what ultimately happened was we used our relationships in the airline industry to come up with this business plan to create an airline-created consortium company that would compete with Priceline in the discount travel space. And so my entrepreneurial start was not, two kids in a garage kind of, trying to get angel money the way most entrepreneurs start. It was actually within an ivory tower private equity firm being tasked with, okay, here's an idea, and we have these airlines that will take our calls, and sort of three of them will do whatever we ask of them. Create a startup that will somehow compete with Priceline, which had a $20 billion market cap at the time and seemed insurmountable in discount travel. So that's how I got started.
That's how ours.
Yeah.
Yeah. What part of your job do you hate to do?
Let's see. Well, today I spent about an hour signing books. I have a book out, and I have to sign a lot of them.
Yeah.
I did not enjoy that. That was kind of a waste of time. But anyway, that's one small part of my job I hate to do. What else? What do I hate to do?
Let me rephrase that.
Yeah.
So, Jeannie, your assistant.
Yes.
So if I called Jeannie right now and said, "What's Spencer really good at?" What would she say?
I think she'd say I'm good at articulating the strategy and vision of the company, sort of what the heck is Zillow all about and why do we show up for work every day. So I think I'm pretty good at that. I do that a lot. That's what I've learned about being a CEO, especially of a big company. Now we have 2,000 employees now. Is it's all about communication. It's just repetitive communication, saying over and over and over again, either to the media or to an investor or to an employee or to a candidate, what is your company about and why? And that's kind of what I do. I'm basically just a spokesperson.
So if I called Jeannie and said, "What are you bad at?" What would she say?
I'm not very good at the small stuff. I sort of loathe chit chat, and so
That's the reason you're back in the room and not talking to anyone?
Well, you told me to wait in the back of the room. I mean, come on, give me a break. I talk to somebody. talked to Kevin, I talked to John, and I talked to a couple people. But I'm not so good at the sort of I don't know. I'm pretty direct, and I'm pretty. I highly value efficiency. Let's just put it that way. And so I sometimes forget to say thank you, not because I'm rude, but because I'm sort of already moved on to the next thing. I think that's what Jeannie would probably say. And I told her that when we first started working together. I said that's what I'm like. Yeah, that's what I'm like, and she knows it.
So, what is it like to manage $1 billion company versus $1 million?
Well, we're a lot bigger than $1 billion company. Point of clarification, we're a $7 billion company.
Multi-billion.
That's okay. You forget it. What's it like? It's pretty different, actually. This whole big company thing is pretty different. I mean, I think of it based on employee count and based on number of offices. So, I was in the New York office yesterday, just for a couple of hours, meeting with some investors, but also talking to our 100 or so employees in New York. I mean, we now have 700 people in Seattle, just a block away. We have 150 in Bellevue. We have 400 in San Francisco, 300 in Irvine, 300 in Denver, 50 in Lincoln, Nebraska, and 100 in New York. I don't know if I totaled to 2,000. Hopefully, I got close. And so what is it like managing all that? It's a lot of people stuff. I mean, I'm a sort of glorified head of HR. Is sort of what the CEO of a company at that size is all about. If it's not employee retention stuff, it's employee recruitment stuff. I mean, that's that I spent a lot of time on that.
Because you spent time obviously in the smaller version of that.
Yeah.
I mean, obviously Hotwire was never, it wasn't 2,000 people all at once.
Yeah, I mean, Hotwire maxed at 200 employees, and Zillow was 1,000 employees until 3 weeks ago when we merged with Trulia. So we just doubled in size. It took us 8 years to hire the first 1,000 people, and then overnight we added another 1,000. So what's the big difference? The big difference between a couple hundred. There are a couple inflection points as companies grow, and I've seen this twice now, because Hotwire was 200 employees when we sold to Expedia, and I joined an 8,000 employee company, I think it was at the time. So the couple inflection points are when a startup gets to about 20 employees, it no longer makes sense to do the daily stand-up of what's everyone working on. Because when you're 3 to 5 to 10 to 20 employees, you do what's up, everybody, kind of around the table. And at 20 or so people, that becomes inefficient and sort of a waste of time. And so then you cancel that meeting, but it's still necessary for a couple of people to do it, so you get the first sense of hierarchy. Maybe the 3 people do it or the 5 people do it, and all of a sudden there's sort of a senior-junior divide at kind of 20 people. At about 100 people stop knowing everyone's name. And at about 200 people stop pretending that they know everybody's name, because everyone accepts that it's sort of impossible. And then once you pass, 300 or 400, it's a totally different game in terms of sort of knowledge of what everyone's up to. The biggest difference overall is, and what I definitely miss on some days, is I'm not as involved in product decisions as I used to be. It's just impossible to be. And I think that that is hard for a lot of founders, especially. Because most of them are product guys. Yeah, most of them grew up through product. They're engineers or PMs or designers or whatever, just really involved in product. And it's not. I mean, I probably could be. I guess I could clear my calendar to be super involved in product, but it's actually sort of inappropriate. Like people would no longer welcome that. And you shouldn't be here. It's like, well, that's what you hired me and these other 20 people in the org chart to do. So like, why are you here pushing pixels around? Like, that's not what you're supposed to be doing. So that's the biggest difference, I think, between small companies and big companies.
Yeah. And so the big merger you obviously just mentioned between yourself and Trulia is huge, double the size of the company. So tell us, how long did it take to negotiate? So let me make sure I understand. How long did it negotiate that deal to get to the lawyers?
Well, so we had our closing dinner last night, actually, with all the lawyers and bankers and accountants and all the Trulia people and all the Zillow people. So we were reflecting on this. It was 6 weeks from first phone call to deal signing. which is pretty unprecedented for a $2.5 billion acquisition. And then it was 8 months to closing because the Federal Trade Commission had to review it and approve the deal. And we closed about a month ago. But that 6-week period was, I think, overture number, I don't know, maybe 5. And this is all in the public filings where we have to list sort of document the whole history of our relationship between our two companies. We first approached Trulia about a deal, I don't know, in 2006 or 2007 when we were both still private. We then approached them again once Zillow was public and Trulia was private. We then approached them again on the eve of their IPO. We then approached them again once we were both public. And by the way, when two companies are private, it's almost impossible to get M&A done because each company disagrees about their respective value. Right? And so, it's really rare. I think Grubhub Seamless is one of the very few private to private stock mergers that is pre-IPO and then the company went public that I can think of. When one's public and one's private, like when Expedia bought Hotwire, it's a little bit easier, but the target still thinks they're going to be worth a lot more when they're public, and that's one of the reasons why so many of these so-called unicorns aren't getting bought is because they think they'll be worth more when they're public. And usually they're right. In the case of Groupon, I guess they were, at least currently wrong. They sort of reportedly got a higher M&A offer when they're private than where they're trading at publicly. But anyway, so we had lots of different false starts over the years, and this last overture was 6 weeks from start to finish.
Because you already somewhat accustomed to sell. Talked so many times, right?
There was a market. The market had already declared what each company was worth. It was an all-stock deal, and so the negotiations on the economics were much simpler than in past approaches. We also had, and this is talked about in the merger proxy. We had very similar shareholders by then. So Zillow, I think 2 or 3 of our top shareholders owned 30 or 40% of Zillow and owned 30 or 40% of Trulia. And so when we approached Trulia, they were common shareholders that were encouraging the marriage.
Yeah. And so with that merger comes obviously a lot of things, culture, synergy, et cetera. But talk to us about innovation. Like, how will Zillow continue to be innovative? Do you currently feel like you have a very innovative, team internally? Are you going to bring people in from the outside and say, hey, take a look at this because we're too deep into the forest? What's your innovation look like in Zillow?
Well, let me describe why we bought Trulia first, and then I can answer that because it's related. So the strategy is to operate multiple brands. We now have 4 brands. We have Zillow, Trulia, HotPads, which is a rentals company that we bought a couple years ago, and StreetEasy, which is our New York brand that we bought a couple years ago. And the idea is to have multiple brands so that wherever a consumer is looking for real estate information, they will hopefully see multiple brands that are owned by Zillow Group and hopefully select one or more of them. Where might they be looking for real estate information? Maybe in their email inbox where they're seeing emails from companies, maybe in the news media, maybe when they ask a friend about what website to use or mobile app to use, maybe in the App Store, maybe in the Google search results. Wherever they look, hopefully they'll see multiple Zillow Group brands. So as it relates to innovation, we are keeping separate these 4 consumer brands, the product development teams that work on consumer-facing initiatives. They're totally independent and they're still encouraged to have a rivalry and hate each other's guts. The back end, so the parts of the organization and technology that face the industry, the real estate industry, is all being integrated or has been integrated. So for example, our ad salespeople that call on real estate agents and sell them advertising, that's one person from Zillow Group that will call a real estate agent and say, buy media from Zillow Group and your ads will show on Zillow, Trulia, HotPads, and other sites. The listings infrastructure, so running all of our MLS and broker feeds, all of that type of stuff will be integrated under Zillow Group. So how do we stay innovative at the actual brands? The different brands have different philosophies on that, actually. So StreetEasy, for example, has a much more centralized product development culture where it sort of comes from a head of product who is a head of design who's sort of responsible for that innovation, and it's much more top down actually in terms of how the work gets parsed out among engineering. Zillow, with a much larger engineering team of a couple hundred people, has a much more decentralized approach. We actually don't have anyone whose title is VP of product or chief product officer. We have very small product development teams of about 10 people each, and they have pretty narrow mandates. So one's responsible just for email, one's responsible for personalization, one's responsible for the map experience, one's responsible for the profile page of real estate agents, one's responsible for the reputation system, the reviews system. And each of these 10-person teams have a product manager, a designer, a couple front-end developers, a couple back-end developers, and maybe a dedicated tester or two. And they kind of do whatever they want. They're sort of like it's a confederation of little startups is kind of the way I would describe our 15 to 20 individual 10-person product development teams. And so they stay innovative by having their own code branch and their own ship queue, and they do their own thing. And it works really well.
Basically, you're just letting them stand alone and do it.
Yeah, and Trulia has kind of a hybrid between the Zillow and StreetEasy model.
Sure. So you've attracted some pretty high-level executives over the last few years. How has that happened? I mean, when you get like a Errol Samuelson and some of those big names from competitors, obviously.
Yeah.
How do you do? I mean, how are you doing that? I mean, it's a big deal. I mean, honestly, it's a big deal. I used to be in this real estate space, and I actually knew Errol. I mean, I still knew Errol, but taking that guy from that kind of level.
We hired the president of one of our rivals, which is not something that usually you don't usually see that. We're a great place to work, and we're winning, and people want to be on winning teams. And
so can you call hey Errol, want to come to work? I mean,
yeah, I mean, I knew Errol really well. I always respected him. I always thought he was an incredible executive at a crappy company, and he wanted to be on a winning team. I think I just gave John Cook his headline. Damn it! I promised I wouldn't do that. Anyway, he wanted to be on a winning team, and we provide that opportunity. I mean, specifically, he wanted to be on a team. He wanted to have his most as significant an impact on the industry as possible, and you want to play on the biggest stage. And Zillow, even before buying Trulia, was the biggest stage, and now we're twice that big.
Yeah. So there's no tricks to trading. There's no tricks to that. Just being yourself and being genuine and saying, hey.
I mean, we're an innovative company, and that attracts great people, and I think that's the key. And as we discussed, I mean, I spent a lot of time on this specific topic of talent retention. It's kind of the most important thing. So.
Yeah, without you, for some reason, don't have weird so. You sit on 5 boards, you work with Techstars. How much do you work with Techstars? How much do you do?
I was just discussing that with someone. So this cycle I didn't participate. I wanted to. In past cycles I've been a mentor. I've written a couple angel checks to Techstars companies, and I've spoken at it. So in past years I've been much more involved. This year I didn't have time. I try to go to the demo day every year.
Yeah, in that process, what do you bring from that entrepreneurial, in the garage, as you would call it, in the garage atmosphere to, a $7 billion company? What pieces and parts over the last couple of years have you like, here's some things that...
Oh, well, I mean, the reason I do it is I do it for me. I don't really do it, I mean, it's totally selfish. I do it because it's fun for me to see the energy and passion of kind of real entrepreneurs that are actually taking risk and leaving cozy jobs at Amazon and Microsoft and sometimes Zillow to actually do like a real risky, scary startup. And I think that's cool, and I draw energy from that. And from their passion and sometimes naivete, that's fun for me to, for me to vicariously live their startup life by getting to know them a little bit.
Do you mentor any people right now? Are you mentoring any?
I mean, I don't know if like how you define mentor. There are a couple startups that I've invested in that I provide advice to. Which ones of them? I can't quite remember which ones have gone through Techstars, but I don't know. Vodo, for example. I don't know if Noah is here from Vodo. Is a company that I've invested in that I was talking to them today. Sure. Julep, I'm on the board of. I've invested in Julep. I know she did the last one with Julie, who's on the board of Julep with me.
Cool. And what about yourself? Do you have mentors?
Yeah, I have a lot of mentors. I mean, the most obvious one is pretty well known to the Seattle tech communities. That my co-founder at Zillow, Rich Barton, who's the chairman of Zillow and the founder of Avo and the founder of Glassdoor and the founder of Expedia, and a very prolific angel investor and a great guy. And he's obviously my, I've learned most of what I know from him.
Yeah. And what's the value, like, over the years of seeing that the mentor-mentee relationship can be extremely valuable, it can be absolutely no value, right? So obviously there's a ton of value between you and Rich for very obvious reasons, but how much do you think, in the startup community, that mentors, how much can you help them? Like if you were like one of your companies, if you had a little bit more time and spend more time, how valuable would that be to them?
It's hard because the mentor never, they never understand like an iota of your company as well as you do. I mean, they may fake it, but they really don't. So, you balance that with there's definitely pattern recognition, and they've seen a lot of this stuff before. But whether it's a VC or an angel or a mentor, they're not likely going to give you a startup great product input, I don't think, because they're just not, they don't understand the use cases of your product, they don't understand they may not have even used your product, quite candidly, and they're probably not in your demo anyway, and you spend 24/7 thinking about your product and the landscape and your demo and your users and your use cases, and they don't. So just because they started some successful company doesn't mean that they have like the Midas touch when it comes to product. I think where they can be helpful is on organizational stuff, on recruiting. It can be super helpful. I mean, I've done that with a couple of the startups that I've invested in, where the phone call from me to the Google engineer that's like, oh, I don't know, is this company worth going to? Like, that's sometimes helpful. Fundraising advice and fundraising introductions is super valuable. Probably the way you would get the most value from an angel investor or a mentor is from the fundraising introductions that they can provide.
What do you think the single biggest learning thing for you in the last, say, 2 to 3 years? If you pick one thing, like what you really learned?
What I've learned that leadership is all about repetitive communication. So I'll give you an example. If you think about, let's think about anything recent political, because politicians are great at this. So let's think of how Obama dealt with the Netanyahu speech at the UN, or sorry, at the Congress, right? So kind of a random thing. Just bear with me for a second. So. It totally incensed Obama. The White House didn't want him to come and speak to Congress, right? And so the White House was trying to get out different messaging points about the issue. Like, we're negotiating in good faith with Iran, cut us some slack. We're actually not pissed off at Israel or Netanyahu for coming to speak. It's all good. We should pursue a nuclear deal with Iran because it's the best thing for America. So they're trying to get those messaging points out to us, the citizens, right? But we're all busy not really paying attention and maybe not even really caring and kind of living our lives. And so, you'll get like a glimpse of that on a headline of a newspaper, a physical paper newspaper when you're in line at Starbucks, and you'll hear it in the radio briefly, and maybe somebody will share some newspaper article in your Facebook stream, and you'll sort of see something vaguely on Twitter about it, and then there are all these like kind of messages, like noise, and in the aggregate, you form sort of this mosaic of like understanding kind of that politician's perspective on that particular issue. So that's kind of like what I do. So what I didn't really realize, and what I think like now I get, now that I think I'm a much better leader and communicator, is I have to say the same thing over and over and over again to employees. not because they're like dumb or not listening. It's just because they're busy and like have other shit going on at work and at home. And so, we're operating these multiple brands because that's, that allows us to have multiple brands in front of the consumer. We need to stay innovative as a company. Whatever. We reward risk taking. Zillow is a fun and interesting place to work because it's an entrepreneurial environment. Like, I have to say and try to convey those messages through all these different channels, right? Whether it's an all-company email or an all-company speech or individual one-on-ones with an employee or a chit-chat in the elevator or, talking in a message in a room on HipChat or whatever, right? Over and over and over and over again. And, I'll make an off-the-record comment for a second, which I know is impossible in this day and age because I'm sure I'm on Periscope right now, I'm sure. But my co-founder of Hotwire, for example, was terrible at this because he was super smart. He was the CEO and I was the kind of number two at Hotwire. And he was super smart, but he had no patience for repetitive communication because his attitude was like, I know all this stuff in my head. Well, just get there faster. Like, why are you not there with me? I mentioned this like 2 years ago at a company meeting. Like, how can you not remember? Right? And that was like his attitude. And he, was like, I kind of agree on some level, but like the fact is that there's a lot of turnover at companies and people, again, aren't really paying attention. So you have to say the thing over and over and over again. Anyway, that's the thing I've learned is that if you want anything to sink in with employees or the media or wherever else, it's to be repetitive, over and over through all these different mediums, all these different channels. And I think that's why really like hardcore, super high IQ people usually make pretty crappy CEOs or executives because they sort of view that form of repetitive communication is beneath them because they got there like 10 minutes ago.
I've already said it to you.
Yeah, so like I think that is a pretty big gap in leadership styles between a lot of people.
Yeah, I mean, we even see that even in small companies where the CEO's brilliant.
Right.
I mean, he has brilliance and he just doesn't understand why he has to say it twice.
Right.
I said it last week. So let's talk a bit about the real estate market. I noticed that obviously you're in it, have been in it. What macro trends do you see happening right now that are having a positive effect in real estate? More macro stuff. U.S.
Well, I mean, the trend of greater consumer empowerment through access to real estate information is like massive. I mean, for those, most of you are, most of us are pretty young, but probably many of you are not even homeowners yet. But for most people, the last time they bought their home, they were looking through the newspaper to see listings. That was 5 or 10 years ago, and today, obviously, that feels like eons ago. And so it's a very, very significant trend of mobile home shopping, equivalent access to information between the practitioner and the consumer, which is totally disruptive and seismic. Like it used to be the last time most of us bought homes, the professional had information that we did not have. And those days are over, right? You now have the same information that the practitioner has, and that's leveled the playing field and had huge changes in the industry. Other like macro housing trends, well, interest rates are really low, so if you have equity in your home and you have a mortgage and you haven't refied yet, you should now, like immediately. You can use the Zillow mortgage app for that if you want.
What's the
So that's an obvious trend. There's really limited inventory, so homes that are priced right are getting multiple offers, and it's a very competitive market right now for limited inventory. So it's generally a seller's market, at least in Seattle.
What about a negative trend? What's a negative trend?
Well, there's a lot of debate around whether there's a real negative macro trend against home buying. This is something that we've explored a lot at Zillow and analyzed. So, I mean, the data says that at the peak of, well, historically, the homeownership rate in the U.S. was sort of 62, 63%. So sort of, 6 out of 10 people owned a home, 4 out of 10 people rented a home. And then during the housing bubble, basically 8% extra people who really weren't supposed to buy a home bought a home because they got a loan they weren't supposed to get. And so the home ownership rate got up to sort of 68, 69%, and now we've come back down to 62, 63%. And there are experts, pundits, that believe that something fundamental has changed. that the sharing economy and the millennial generation, we don't buy music anymore. We stream music. We don't buy cars anymore. We share cars. We don't even buy hotel rooms. We stay on people's couches, and it's just a sharing economy in all things. We don't buy movies. We stream movies, and therefore that applies to housing. That sort of so goes the argument. I personally don't believe that, and we don't have any data to support it. What the data says is that millennials still aspire to own a home. They're just pushing that out by 5 or 10 years because everything's happening later in life, and they want to buy a home, but in their mid-30s, not in their late 20s, because that's basically they have lots of student debt, and so they're living on mom's couch or in the basement for an extra 5 years to pay off their student debt, and they're getting married much later, and so the biological instinct to nest, which is very real, doesn't really occur until a little bit later in life. So, but this is hotly debated in the weird little world of real estate geeks that I live in.
In the world. What do you think will change the most in real estate in the next 5 to 10 years?
I think, I don't know if this will happen in 5 years, but probably in 10 years, more aspects of the transaction will become automated. It really is the last major transaction, that looks a lot like it did 10 or 20 or 30 years ago. And electronic signature has helped. I mean, now when you submit offers and when you go through the closing process, I mean, you're not signing physical papers anymore for the most part, and so you can turn around. Like, for example, a seller can drop the price on his home just by texting with an agent and then doing DocuSign or eSign or whatever through his smartphone within 10, 20 minutes. That process used to take a couple of days of going to the office and pushing paper back and forth, but there's still so much further to go. So I think that that will improve quite a bit over the next 10 years. Regulation permitting, you're not gonna. I don't think you'll see like a one-click buy on a house, but yeah, I don't. It's not.
Yeah, that's gotta be perfect.
Look, there's a startup in the valley that's kind of their business plan. So you joke, but these companies are getting funded. So we'll see.
So that actually leads me to a question that we have here. So do you think that there's enough interesting things happening in the startup world in real estate?
Oh yeah, totally. And I mean, it's the blessing and the curse of Zillow's success is that a lot of things are getting funded in the space, and they sort of are drafting off of our success and Trulia's success, and there are others. CoStar is a very successful company with a $6-7 billion market cap in the commercial real estate space, and others. And so, in particular, in the rental space, but what happens is, every 21-year-old moves to San Francisco. They use Craigslist to find a rental. They realize Craigslist sucks, and they're like, I can do better than this. And they do some sort of a mashup of rental listings or real estate listings on a Google map, and they're like, oh gosh, this is, renting an apartment shouldn't suck. And then they get angel funding, and boom, they're like a rental startup. And there are 30 of these, that have been able to raise, I don't know, up to $5 million seed rounds. And then most of them hit a wall at the end of that, and they call us, and they try to sell to us. And
How's that turn out?
a couple of them have succeeded, actually. Hot Pads is one of them. We paid $20 million for Hot Pads a couple of years ago. So anyway, the funding, there's a lot of excitement around funding real estate startups, but it's harder than it looks in real estate and in all verticals.
And do you think there's a section within real estate, a niche within real estate that is more ripe for disruption than others?
Well, a lot of the innovation in real estate has been on the B2B SaaS side. So companies trying to build technology or CRM or some sort of piece of software that real estate agents or real estate brokers want to use. And that's really hard because it's a very, very fragmented customer base that's very hard to sell into. You not only have to build great technology, but you have to get adoption, usually through lots of parts of the value chain. You have to get the multiple listing service to let you use their data, you have to get brokers to let you call on their agents, and then you have to get agents to open their wallet. And then you have to get agents to actually use the software once they pay for it, or else you have a huge churn problem. So we've bought a couple companies in and around that space, including sort of the granddaddy of them, a public company that's based in Bellevue called Market Leader, which was bought by Trulia for about $350 or $400 million, and is now part of Zillow. Anyway, so that there's a lot of interest on the SaaS B2B software side of the real estate space, but it's really hard for those companies to get traction.
Sure. And give us a couple companies, maybe examples that you think maybe you originally thought had a lot of promise and just flamed out for whatever reason we may not know. What are a couple companies that you may?
Well, I've invested in a couple of those, but they're all kind of hanging on by the skin of their teeth, so I don't want to throw anyone under the bus yet. I have none of my angel deals have gone bankrupt yet. I'm sure I've just jinxed at least 3. No, but I mean what I've observed is I've observed firsthand something that the media, the kind of tech media has written about, which is the Series A crunch. So what has happened is, as the seed rounds have gotten so big, the Series A VCs are expecting real traction. They'll be like, well, your product is good, but you only have 100,000 monthly users. Call me when you've got real usage. And the entrepreneur's like, I thought that's what VCs were for, is to fund us till we get them. And they're like, no, jackass, when you raise that $4 million seed round, that was the A round, and that's the $4 million that you need to use to get the traction to get to the 10 million users. And then once all the risk is gone, then I'm happy to fund your A round. And the entrepreneur's like, oh God, like when I took that $4 million seed round, I didn't realize that's what, that was supposed to get me to that next step. So anyway, that's real. Like, I mean, that's a serious, that's the downside of the seed bubble. That probably some of you have experienced firsthand. Yeah.
What sector do you think is not getting enough attention?
Gosh, I don't know. I don't know if I have a good answer to that. I don't know. I mean, I think it's not a sector; it's a geography. But I still think Seattle is underfunded, under-respected. I think there's more innovation here than there is capital or coverage. So I think this geography is still an underdog and is sort of being held back by its own humility. I think if we all boasted a little bit about the Seattle tech scene, outside of our little, echo chamber of companies, of sort of things like this, I think that would benefit the overall Seattle ecosystem. It's very counter to the Seattle culture of humility, but I think it holds back the community.
Sure. And tell us, where do you, as a leader, as a real estate guy, where do you think, say, 10 years from now, not say 5 years, 10 years from now, so say 5 years from now that Zillow will be, where do you think Zillow will be in 5 years?
Well, hopefully our brands are a lot bigger. I mean, you've probably all heard of Zillow. Many of you have probably heard of Trulia, but our awareness in the U.S. is actually much, much lower than you would guess.
Because you're here. Right?
You're here, yeah, and you're tech savvy, and I mean, for most people in Toledo and Miami and Tampa and San Antonio and wherever, they're still looking in the newspaper to see what's for sale, or maybe they're going to a brokerage's website, or maybe they're just going to Google for the first time to try to find a real estate website. So I hope in 5 or 10 years that Zillow has, and Trulia had the brand awareness of a LinkedIn that has, or Netflix or an Expedia even that has, nearly 100% brand awareness. In terms of product innovation, I think it's still so early. I mean, this is, when we left Expedia in 2005 to start Zillow, the first probably 20 or so employees who started Zillow all came from Expedia. Even 10 years later at Zillow, we're all still there. So the vice chairman, the chairman, the CEO, the CTO, the 3 VPs of product, or 3 VPs of engineering, the CFO, the COO, the CMO, and the head of strategy, all basically had the same exact job at Expedia. And we all left between sort of 2005 and 2008 to come to Zillow. And we all still have, we're all still at Zillow. And when we left Expedia, the key reason I left Expedia was I felt like we were sort of done from a product standpoint. Like I literally looked at what we were going to ship over the next year or two, and I just wasn't that jazzed. I was like, this is sort of incrementalism, and it's not that cool and exciting. And when I look at what's on our list over the next couple of years at Zillow, I'm like, wow, we're going to look back at Zillow 2015 and sort of laugh at how crappy the site was. Just like when I look back at what our site was in 2013, I laugh at how crappy it was. So that to me is cool and energizing. That's why I'm there. There will be a day, and I've said this to employees, there will absolutely come a day when I look at like what's on the queue for the next 2 years, and I'm like, this is okay, but it's not cool enough, and it's time for a management change. It's time for a different type of leadership team that is maybe frankly more cost focused and just isn't as growth oriented. And that's okay too, but that's not for me.
Yeah, that means change is good. So tell us, is it possible to have real estate without MLS?
Well, so let's define what an MLS is for everybody first. So there are about 900 MLSs. An MLS is a local nonprofit, usually a nonprofit, that's typically owned by the local agents or brokers. And what it is when an agent takes a listing, they enter into what we think of as basically an intranet, the listings information. And what it does is it shares that listings information with the other members of the MLS, all the other agents in the community. And specifically, what kind of the secret sauce of the MLS is it also shares the commission information of what a listing agent will pay to a buyer's agent. In other words, if I'm selling my home, I'm willing to pay 6% to my listing agent, and she'll turn around and pay half of that to a buyer's agent. So when an agent comes into the office every day, they log onto their MLS to look at the available inventory and also to understand what their part of the commission will be if they bring a buyer to those.
So what's also important to understand in this is they're all separate. As you said, there's how many?
There are 900 in the US. Basically every city in the country has their own.
Yeah, so it's not like it's just one big database you're plugging to.
And so when the internet came along, these MLSs, agents and brokers who owned these MLSs started saying, well, will you also let me put all this cool database of listings information onto my website? And so these brokers and MLSs adopted what's called IDX, or Internet Data Exchange, which means that the MLS puts listings onto agent and broker websites. So when you go to Windermere or John L. Scott or kevinlasoda.com or his brokerage Findwell, you see listings from the Northwest MLS via IDX. So all the listings that are in the MLS appear on a broker or agent's website. Then when third-party websites like Zillow and Trulia came along, we said to the MLSs and brokers, hey, we're not a member of your MLS, but we have a lot of traffic. In fact, we're the biggest site in Seattle by far. Why don't you send us your listings also? That would actually be a service to your agents and brokers. That way they don't have to do it themselves. And almost every, maybe it's too far, but most MLSs in the country agree with that. Almost every day we're announcing another couple MLSs that are now sending listings to Zillow and Trulia. The Northwest MLS in Seattle happens to be one of the only backward MLSs in the country that doesn't send listings to Zillow or Trulia. Yet.
No comment.
Anyway, so your question was like, will the MLS exist? So yeah, MLSs play a very important role in the real estate industry, and Zillow is not trying to disrupt them at all. We're partners with them, and they serve a really important role that is the reason that homes get sold, which is it shares listings information among agents in the community. The role of the MLS has changed a lot in the last 10 to 20 years. And as I say, a lot of MLSs now view as part of their charter putting listings onto the internet, either onto broker agents' websites or onto third-party sites like Zillow, which is a relatively new role for them.
Yeah. So do you think we'll ever have a point where you have maybe there's some MLS listings and maybe starts to be a trend where they're using a non-MLS that's still listed out there, and I just wonder if it's ever going to be possible where you don't have to deal with the MLS.
Well, a lot of MLSs, including the Northwest MLS, actually have restrictions on listings that you don't enter into the MLS. And I don't know exactly what the rules are. I'm sure Kevin can correct me, but within some number of days after you take a listing, you have to enter it in the MLS, or else you get fined by the MLS. Am I in the right ballpark? Yeah. Okay. That's one of the ways that MLSs sort of regulate their own position of paramount importance is by fining other people that don't use them. Anyway, no. I guess the short answer is I don't foresee a future where listings aren't in the MLS. MLSs are great actually for the consumer and for agents. They're not the sort of implication of your question is that like they somehow create an efficiency or that they're bad. I actually think that MLSs are really helpful to the sale of real estate. Sure. The sort of corollary question, which maybe is sort of implied, is do I ever imagine a role without real estate agents where buyer and seller will disintermediate the real estate agent? And the answer to that is unequivocally no. It's just too complex and infrequent and expensive a transaction for most consumers to stomach the risk of not using an agent.
Yeah, you'll still have, there'll be more and more people that will be more comfortable with less hand-holding, but there will still be people that have to have that.
Well, and the role of the real estate agent has changed dramatically because of the rise of the internet and sites like Zillow and Trulia, so that today they're no longer information gatekeepers, they're now transactional consultants. So the reason I hire a great real estate agent is to help me. It's not to give me the listings. I can see the listings myself on the internet, on Zillow or on any broker's site or agent site. I hire an agent to tell me what to do because I don't know what to do. And so they're not information gatekeepers, they're actually in the transaction. And so their business models have changed. Agents now typically work as part of a team with several agents all working together because the consumer expects a higher level of responsiveness. My mom was a realtor when I was a kid in New York, and it was very typical back then to work 9 to 5. Somebody, they didn't have email back then, but if someone called you, they would leave a message on your answering machine and you return the call the next day. Well, that doesn't fly anymore, right? We now expect to get instantaneous answers from our smartphones to any question at all. And including which way does the kitchen face and is the backyard sloped and why has this home been on the market for 2 years? And so I want instantaneous answers to that question. So their business model has changed, their structure has changed. Some agents have unbundled their commission or they're willing to negotiate on commission more because the consumer is saying I'm doing these things for myself. So things have definitely changed in the real estate industry, but the fundamental concept of you hiring a real estate agent to buy or sell a home, that hasn't changed, and I don't think that will change.
Yeah. So, in me just doing research, and before I get up here, to be somewhat smart, right? So I was doing some research. I came across something, and you'll smile because you know about this. Many people won't hear about this. So, Rupert Murdoch from Move.com.
News Corp.
What's that?
News Corp.
Yeah, News Corp. Asked a Seattle judge to remove the competitive advantage that you have with Zillow and Trulia. What are your thoughts on this?
Well, what you're referring to is when we hired Errol Samuelson from Realtor.com, our competitors were dismayed and they sued us.
Dismayed, I like that. They were dismayed.
And they sued us, and that lawsuit has been winding its way through the courts now for a year. And Rupert Murdoch inherited that lawsuit when his company News Corp bought Realtor.com. Their latest allegation in this lawsuit is that that Errol gave us the idea to buy Trulia, and that's what's alleged in that complaint. And I already described at the beginning of our talk, the rather obvious idea to acquire Trulia occurred 9 years ago, and was obvious to anyone, even paying a little bit of attention that Zillow and Trulia might tie up at some point. So I can't comment on that specific allegation any further.
And rightfully so. So feel free to start putting your questions in your head. I got one more question. So, in the startup world that so many of us live in, is there what you would say a work-life balance, and how do you feel about that?
I was just talking to Pete Flint about that last night at our closing dinner. So Pete was the CEO of Trulia, and ran this incredible startup for 5-6 years, and then ran a public company for a couple of years, and now he's on my board. So he's my boss. He's on the board of Zillow Group, board of directors. But he's not working full time because he's not the CEO of Trulia anymore. And you know, he said, and I totally agree, that there really is no work-life balance. That when you're in when you're deep in the throes of trying to grow a company, it's just, I mean, there's not much balance. I mean, I work my tail off, and then I have as much time as I can scrape together for my wife and kids, and that's it. You know, I don't. There's not much time for anything else. I don't play golf. I don't. You know, I hardly read books. I do my best. I guess I found time to write a book, but that's different. That was for Zillow, so that's work related. Yeah, it's just hard, and you know, don't kid yourself. I think if you want work-life balance, I'm going to give John another headline. I'm not going to say it.
Don't do it.
If you want work-life balance, work at Microsoft. There you go. All right, they're a partner though. I love Microsoft. Oh well. All right, I gave you another pull quote.
One question I ask
Literally every guest, I'll ask one question, ask a couple questions, but one question I never miss is, how did you earn your first dollar that wasn't from a relative?
Oh, it wasn't from a relative. I had my whole answer there. First dollar not from a relative. I had a job in high school. Actually, my first real job was I was probably, I don't know, 16 or something, and I worked at ironically for Rupert Murdoch. He doesn't know this, but I worked at Fox in LA. I lived in LA at the time. Grew up in LA, and I worked at Fox Broadcasting back when it was the fourth network, when there were only 4 TV networks, and it was really disruptive. And you know, Married with Children and America's Most Wanted, I think, and The Simpsons was just sort of getting started, and Beverly Hills 90210. I mean, that era of Fox. And I worked in the research department that summer, analyzing ratings, which was actually super fascinating. And what I did specifically was I was on the team that was responsible for counter-programming the Summer Olympics, which were on NBC at the time. I think this was 1992 maybe, or 88, I forget. And so what we would do is we'd say like, okay, NBC is airing whatever, women's gymnastics tonight. What are the demographics from the last 6 Olympics of who likes to watch women's gymnastics? Okay, should we air, you know, this specific episode of The Simpsons or this rerun of Married with Children or this, you know, whatever, this news special that have different demos that it's skewed towards as good counter program, because there was no time shifting, there were DVRs, so you kind of had to watch one of these 4 things at the time. Anyway, it was a great job and really fascinating, and I learned the importance of data. I mean, even back then there were probably 30 people in the Fox research department working on these types of things. I'm sure today there were 300 people using big data and all sorts of cool technologies. And it was a really interesting job, actually. But it also took all the romance out of broadcast TV, because one of the projects that I did was focus grouping on storylines from Melrose Place. Like I would actually run focus groups that summer and analyze consumer reaction to things like, actually one of the really touchy things that summer was we had a gay couple on Melrose Place, which was, I think, probably the only, at the time, the only gay characters on network TV. And so the question was like, is America okay with it? You know, or is this not, you know, is this not something that will fly yet in America? And so just doing research on that and actually talking with consumers about it and trying to do some qualitative research. And it turned out that America was ready for it, but they just actually didn't like those characters themselves. So we did actually write them out of the storyline, but introduced other gay characters. Anyway, so it takes kind of some of the, you think that TV is sort of like creative people sitting together, like drinking beer, eating cold pizza, coming up with cool, funny stuff for us all to watch. And there's actually a lot more data and sort of nerds involved, even back then. So anyway, that was my first real job.
Well, thanks, appreciate that. Questions, guys? We have one question, Lindsay, right there.
Okay, so there's a theory that the kind of person who's hardwired to start a company is not necessarily the same person who's wired to scale it. You obviously buck that trend, but you did mention that you're kind of a product guy part, now you're playing HR.
Yeah.
So theory on
I totally agree with the theory that in general it's a pretty different skill set, but I think there are some exceptions. I think I'm an exception, and it's mostly tied to the repetitive communication thing I talked about, and also life stage. I think I could definitely see, I scaled with Zillow because we started Zillow when I was 29 or something, and now I'm 39, and so I'm more interested now in like running a big company, and I'm okay not doing product stuff or not working on certain things anymore because like now I'm interested in this, and I think that was a lucky coincidence, I guess.
In the back, standing up with your hand looked back, yeah, you could.
I was wondering how big the potential emergence of a consumer-facing national MLS, to what extent do you think this would impact, either positively or negatively, any of the programs?
So there's an industry initiative called the Broker Portal Project, which is probably what you're referring to, which is a number of real estate brokerages trying to get together and create really a competitor to Zillow. Having run a consortium company before in the travel industry where we had 6 airlines that invested and created Hotwire, I can tell you firsthand it's really hard to get competitors to agree on anything. It's also usually illegal to organize things like that because companies that are supposed to compete with each other are not really supposed to get in a room and talk about colluding. So there are significant antitrust issues associated with that initiative. And then most importantly, it's pretty hard to build an audience. I mean, Zillow has 90 million monthly unique users, but it took us 10 years and a couple $100 million of losses to get there. And so I think that initiative has a lot of challenges in front of it. I worry about a lot of stuff at Zillow, and that's not at the top of the list.
What did you?
Are you gonna pitch me on active words?
The code is prize efficiency.
Yeah. Oh, I walked right into that one, didn't I, Buzz?
No, different question. What have you learned that you didn't expect to learn?
What was the question?
What have you learned that you didn't expect to learn? Mike asked you what you've learned.
What question is what have you learned you didn't expect to learn?
I probably ended up liking the real estate industry, the real estate category more than I expected. A quick story on when we left Expedia, Rich and Lloyd, our co-founders, they left a little bit before me, and they weren't actually sure what they were going to work on. And when I went to meet with them and said, I want in, they said, okay, but we have 2 different ideas. We're not sure what we're going to do yet. One is in online real estate, because it seems like there's this opportunity to put all this cool data online for free. Nobody's really done that. And the other is photo sharing, file sharing and photo sharing, that we're finally editing all our family photos for the first time because we're out of a job for the first time ever. They worked at Microsoft and then started Expedia within Microsoft. And so they were editing all their family photos, and they were having a hard time moving files between like a home computer and different machines. And they're like, so it's basically like file storage. And the word cloud didn't exist. This is in 2005, but they were basically describing Dropbox or Box or AWS. This was before any of those companies. And we talked about that idea for a while and thought about it, and we said, file storage is going to be a race to the bottom because eventually these giant companies are going to just give away storage in order to get you into their ecosystem. And we didn't know it, but Google, Microsoft, and Amazon obviously all did that at the time. We sort of accurately predicted it. So we said, let's not do that. Let's do this real estate thing. And so I didn't have a real inherent passion for real estate. I just wanted to do a startup with Rich and Lloyd. So that surprised me. It turns out I actually really like real estate. And that's really darn important. I mean, a lot of the angel things I turned away, for example, are just because I'm just not interested in that category. I'm sorry, I can't get fired up about it. And so this is so obvious, right? I hate obvious advice, but I'll give it to you anyway. You have to be really passionate about the category that you're in. And that surprised me.
Pink dress shirt. What? I think you're right. You're wearing a pink shirt. Yeah. Whoa. You're wearing a pink shirt. That girl's wearing a pink shirt.
So you said you do a lot of work with employees. Talk
A lot. I mean, God, I don't even know where to begin. I can talk about this topic for hours. This is so important. Okay, in 1 minute or less. We have a culture with core values. Z is a team sport, winning is fun, move fast, think big, power to the people, turn on the lights. And each of those core values is tied into our compensation system, our review system, our recognition system. We have what we call a ZOL wall. ZOL is what we call all employees. The ZOL wall is a corporate intranet. We give karma to people, and when we do, we denote which core value it was associated with. And when I give karma to somebody, they get an email, and their manager gets an email saying who gave them the karma and what it was for, and what my paragraph is about it, and then that ends up on their page on the ZOL wall, and then we do quarterly recognition of who has the most karma points in each office, and so those core values are really like. They're well embedded into the company's systems in a way that usually companies don't embed core values into the system. Usually core values are like words on a stress ball or like a poster in the, whatever, in the break room or something. And we've worked pretty hard to make it actually like integrated into the goings on of the company. And I know that it's successful when I see things like, I don't know, like a manager of FP&A or like a director of tax or something, will incorporate into some meeting that they're running some reference to a core value, like which happens all the time. And I use those examples of people who they're like as far from the HR function as you can expect, and they're not generally like squishy people, but it even sinks into like the really analytical kind of finance-oriented people, and so that means it's probably working. So that's a very short version.
Any questions over here? I didn't want to ignore him or see what.
So you in a purple shirt. It's a purple shirt.
I'm colorblind, so that's cool.
Go ahead.
How excited were you to have Z available as a ticker symbol? How has the company changed? Has happened? Now it's been a few years from private to public.
Great question. So we have a single letter ticker, Z, which is really uncommon. It was actually, so Z, does anybody know what used to be Z? Anyone know? It used to be a public company for like 50 years, yes?
Was that Zenith?
No, not Zenith. Woolworths. Anybody remember Woolworths? It was a big company back in the day. It's like a Macy's kind of company. Anyway, it went bankrupt. And so their ticker, when they went bankrupt, the ticker Z kind of went back to the New York Stock Exchange. Historically, a single letter meant you were traded on the New York Stock Exchange, not the NASDAQ. And the regs changed like 2 or 3 years before we went public in kind of 2009, 2010. So we went to the New York Stock Exchange and said, release the ticker symbol to us, and then we'll let you participate in the bake-off when we decide whether to choose NASDAQ or New York Stock Exchange. And if you don't give us the Z, we're not going to choose you. We're just going to choose NASDAQ, and we don't care what our ticker is. And so they did. They gave the ticker to us, like legally, and then we had a bake-off between the two, and we happened to choose NASDAQ. So we're the first and I think only single-letter ticker company on the NASDAQ. And it was actually really pretty important to me personally because I was, from a sentimental standpoint, my grandfather was really like a serious amateur investor, and I used to sort of sit with him in his basement every day, and he always kept in his breast pocket a piece of graph paper where he actually recorded with a manual lead pencil every day the closing stock price of all the stocks that he owned, and I would sit there with the physical newspaper, and he'd be like, AT&T. And I would have to find AT&T, and I'd tell him, oh, it closed, up a quarter or whatever. And he would like write it on his little piece of graph paper and, 50 stocks. And he always told me that like the kick-ass companies, I don't think he used that phrase, but the kick-ass companies always had a single letter, like AT&T is T. And I thought that was super cool, like as long as I can remember. So I really was pretty jazzed to get Z. And then the public versus private thing, I will say that Zynga was pissed. And Zulily, whose board I'm on, was super pissed. So that was fun too. But anyway, the public-private thing. I was really worried, and to sort of relate it to the prior question about the culture stuff, I was really worried about going public and the impact that would have on the culture, and would it, like most startups, we're a very transparent culture, and we have all hands, and I tell everybody what's going on. And as a public company, it's a little harder to do that. And what I realized actually, after all those years when we were private, of telling employees all this crap at these company meetings, turns out they actually didn't care about any of it. Like the stuff that I can no longer talk about is like, okay, what's our cash balance and what's the quarter trending at, and what's net income and EPS for the quarter or whatever. Like, and that's the type of stuff we used to share when we were private. They don't care about any of that. None of that matters actually to employees. What they care about is the vision and the strategy and where are we going and why are they there and why should they show up for work in the morning, the kind of the high level stuff. And the interesting thing, which I guess back to Buzz's question, this is a total surprise. I am actually much better at communicating all that stuff to employees today, now that we're public, than when we were private, because I'm just so much more practiced. As I said, I spend all day long yapping about my company because we're public to the media or investors. And so when I have time with employees, public or private settings, I'm just more efficient and effective at communicating all that stuff that they actually care about. So the public, the being public thing has actually, I think, helped a lot in terms of our employee morale and communications and getting everyone on the same page, because we're just more communicative, ironically. The downside, it's a little harder to recruit because you can't sort of paint a picture of some big pop in the value of their equity if they go public someday. But I still think Zillow's best days are ahead, and I certainly hope that we're going to create a lot more market cap over the next 10 years than we've created over the last 10. And I think most employees share that opinion.
I think you're a little biased.
Totally biased, but that's my prerogative. I got 2 microphones.
He's the only one who has 2 microphones. One last question. You're in the back, standing. Yeah.
Okay. So since now you have an investor and also raised some funding for company experiences, what's your advice for the newbies or who are raising their first dollar? What are the caveats they should look for when talking to investors?
Oh boy, I guess, when you're raising your seed money, you're trying to raise as much money as possible. Typically, I already described there is a hidden downside to that I think people forget. But even realizing that downside, I would probably raise as large a seed round as I could so that you have as much runway as possible. Just know that you're someday going to regret that. The other advice I'd give is I actually do think it's pretty valuable to have a larger number of angel investors, even at a smaller check size, because investors, especially, all investors, angel investors or institutional venture capital investors, are cheap, and so it creates this aura of success if you have other names that you can reference, and that's pretty important. And so definitely take smaller $25,000 or $50,000 checks from a whole bunch of people if you can. It's more work for you, but I think you'll generally be glad that you can list 10 people that invested, and then their network will become valuable later when you hit a wall and you are struggling to get that A round done. What other advice to give? I don't know. I had a couple examples of actually Techstars companies that I did invest in that sort of hit a bump in the road and were kind of asked me, okay, so is this the time to try to sell the company? I've usually put it back on them and said, do you want to do you have more gas in the tank? Are you ready to make another run at it or not? And I think that's the question that, whenever I make an investment, that's always the question. I love people who have a chip on their shoulder, who have something to prove, who are broke, and kind of are willing to do whatever it takes because they realize they have their reputation on the line. So that's really important. That's attractive. It's sort of the opposite of dating. It's it's kind of more attractive when the person's desperate, because it means they're gonna work their butt off for you as the investor. I don't know. Those are a couple random musings.
That
very uncohesive note.
Yeah, exactly. I'm going to end on that. that statement. So again, thank you all very much for being here. But most of all, thank you, Spencer, for showing up. That's great. Love the insight, and I know you're busy, and it's great to just be able to share this stuff. So
Thank you for having me. Thank you.